organization. So giving training to them and like that. And previously also program, he was a resource person. So we are very much thankful to you, sir, for readily accepting our request and adjusting to our timings. So with this brief introduction, let me request Mr. Harish Krishnan to go ahead with this presentation.
Thank you, thank you, CPCRI, for this opportunity, calling me once again. I know we are running a little late because we're starting 15 minutes late, but I'll not keep you bored. I'll try to make it as interesting as possible. I'll try to cover the topic that has been given to me. So, firstly, it's about companies. So, let's start off with knowing what are the different forms as an introduction, and then we will move to the specifics of a private limited company. So, the first thing, as any business person or anybody who's interested in starting a business, is organizing or setting up an entity. And when you're setting an entity, there are different forms in which you can set it up. Right from, say, a sole proprietorship, it can be a partnership, it can be a limited liability partnership, it can be a private limited company, it could be even a one-person company, it could also be a producer company, as Sir suggested. So there are different forms of organization. So the first thing is to decide on which form of organization you want to choose. Now, I just quickly explain all the features of these so that you have a better understanding of what each stands for. So let's start off with a sole proprietorship. In the case of sole proprietorship, it is a single owner. Basically, you are the owner of the organization. What it means is you have different, you have a business in your individual name. It is called a sole proprietorship. So you don't take a separate PAN card. You don't do any other separate registration as such. With any specific authority, as in like a company or registrar of companies or registrar of firms, but it is in your name. So it is your PAN card that is used as a business for the business's PAN card. So it is a single entity, a single person owned entity. It has a non-corporate structure. So basically, there is no limited, it's not registered under any specific act. And it is, and one drawback is it has got unlimited liability. So what it means is the business and you are the same. So in case there is a liability or a loss that comes, it becomes your personal loss. So assuming I did a business in my proprietary, as a sole proprietor, I bought something for 100 rupees, I'm not able to sell it. Or I'm producing something for 100 rupees, I'm not able to sell it for 100 rupees. I have to sell it at a loss of, say, 80 rupees. 20 rupees is my loss. And this loss is going to be my loss forever. It is like my personal assets will be liable. So if I have to pay somebody some amount after the business, my personal assets become liable and I will have to, or the court will order my personal assets to be sold off so that these liabilities can be met. So that is the biggest drawback of a sole proprietorship. This is the common drawback for most unlimited liability organizations. Similarly, when you are an individual, there is limited capital available because whatever money you have is what you can invest, because there's nothing like giving shares to somebody else to bring in money. And also, what advantage is, it is a simple structure. Legally, there is nothing much to be done. The maximum you will have to do is take a corporation or a panchayat or a registration under the Shops and Establishments Act, and you're ready to go. There is no other registration required. Another drawback is there is no perpetual succession. So what do you mean by the word perpetual succession? What it means is when you die, the business automatically dies. So nobody continues the business because business is in your name. The moment you cease to exist, the business automatically comes to an end. Then it is about your legal hires, or your nominees trying to take over that business into their name or any other entity. So basically, the business, the name in your, the business in your name comes to an end the moment you die, and that's why it's called no perpetual succession. Now, when it comes to audit and taxation, only if turnover exceeds 2 crores, it comes under mandatory tax audit, and your income tax audit is required. There is no other audit that is required. One drawback is for international businesses, this is not much preferred because they all have the risk of something happening to you. They give you money, but something happens to you. You don't supply the things on time. All that risk is much higher for proprietorship. So for international businesses, this is not something that people generally prefer. This is most preferred when it is a small business, when there is minimum capital required and you are able to do it yourself. And for as freelancers, or if you are a consultant or someone like that, this can be an easily good method to have an organization. Now the next is partnership. You can have two partners. There's no maximum limit as of now. It's changed. This note slide is not updated. Again, the same law relating to unlimited liability is there. Again, perpetual succession also, the issue is there because when a partner dies, the partnership automatically comes to an end. Partnership, how the partnership is ended is basically it is done on a stamp paper. It is a stamp duty. It's a stamp paper agreement between the partners, wherein they say who are the partners, what are their rights and responsibilities, what is the capital that they bring in, and all those kind of things. One drawback is it is taxed at flat 30% in your income tax. And the mandatory audit clause is also very similar to what the proprietorship was. Again, it is not much suited for international business. And this helps in a business where there is some capital requirement, but which needs to be financed, which you cannot do it alone. But again, because of the unlimited liability clause, it is difficult to get third-party investors to come into your organization. And then comes limited liability partnership. There is no maximum limit. Minimum two partners are required. This limited liability partnership is again governed by the registrar of companies. So the registrar of companies has two duties. He has to look after companies. He has to look after the LLP also. So all the rules and regulations are managed or monitored by the registrar of companies. Similar to a partnership, this is again written in a stamp paper. The agreement is written and then forms are filed. There are other than the income tax audit, which comes in at when your turnover exceeds 2 crores. There is a mandatory audit if your turnover exceeds 40 lakhs, which means your sales exceeds 40 lakhs, or if your capital contribution. So if you're investing more than 25 lakhs into an LLP, then again you are required to be your books are required to be audited by a chartered accountant every year. So there is some additional cost involved. Again, there are certain limitations to LLPs wherein it is difficult to get external funding, and that is where our topic, which is basically private limited companies, comes in. Okay, so what are the features of a private limited company? So let us start off with that. Okay, you need to have a minimum of two directors in a private limited company. Okay, and these two people can be the shareholders also. So for any private limited company, the point to keep in mind is you need to have two directors, two shareholders. The two shareholders can be directors themselves. So basically, at least two people are required. And is there a maximum limit to the number of shareholders that you can have in a private company? The answer is yes. So the maximum number is 200. So you cannot have more than 200 shareholders in a private limited company. The moment you cross 200, you have to convert the private limited company into a public limited company, which is a time consuming process. It involves more legal rules to be followed. And it is slightly, difficult to maintain a public company if you look at all the compliances requirements that are there for public companies. Now, what happens when there is a company with the same name as you? It becomes a very difficult thing when you have a private limited company with the same name as what the name that you are planning to have for your private company. So that is why the ROC, before the incorporating of the company, there is an option for you to check the name. Whether you can, if you want to start a company, say ABC Private Limited, what you can do is you can go to ROC website and check whether this name is available. And if there is already a similar name available, then you will not be allotted that name. Okay. So how it works is they will not only look at the exact spelling, but they will also look at the similarly sounding names. For example, if there is a company already called Wipro. We all know what Wipro is, WIPRO. If you try to start a company with VIPRO, they will say it is similarly sounding to the already existing company Wipro, and they will not allow you this name. The same thing happens where try to put Z instead of S, C instead of K. All these, can make it similarly sounding to an already existing name, and hence the chances of that name getting approved is very less. So, first thing to do when you're incorporating a company, decide on a unique name. The best advantage of a private limited company is its limited liability. When you say limited liability, what it means is your business's liability is different from your personal liability. So how it works is, I gave you an example of the sole proprietorship, wherein you said, wherein I said that if you had a loss of 20 rupees, your personal assets are liable to make good that loss. That is, the court will say, take that land that this person owns, sell it across, and then close that liability. But for a company, it has separate legal entity status. So unless you have signed up a certain liability that you will personally guarantee it, the company's liabilities are different from your liability. And what it means is your loss in the company is separate and your personal assets are not liable for those losses. Now, every company that you form, they have a basic charter documents. These are called the Memorandum of Association and Articles of Association. So, Memorandum of Association is like the it contain these are called public documents. So these are this is MOA, or the Memorandum of Association has a clause called the name clause, which tells what the name of the company is. The location clause, so where the head office is located, and then the object clause, which tells everyone what the company has been formed for. For example, what the activities of the company will be, how will it will generate that revenue. All that will be explained in your memorandum of association. Also, who are the promoters? What is the capital that they bring in? These are all clauses in the memorandum of association, or the MOA. Similarly, there is another document called AOA, which is Articles of Association. So articles of association is basically the bylaw. Basically, when you form a company, what are the internal rules that you would wish to have in that company? These are defined in the articles of association. For example, if there is a qualification share requirement, that is, to become a director in this company, you need to have X number of shares. Or it could be like how many meetings should be there, how many board meetings, how many general body, board meetings should be there every year. These are the kind of information that are contained in the articles of association. So articles of association is the bylaw. Memorandum of association is the core document which tells you what the company is, what the company will do as activity, what the name of the company is, where it will be located, and all those kind of information. I hope I've made this clear. I'll take all questions at the end, one by one. So if you have any questions, do note them down. I'll take them at the end. Okay. Uh, Now, one advantage of perpetual succession is there with private limited companies. So what it means is, even if one of the directors dies, or if even if all the directors and the shareholders die, even then the company still exists. So with the legal hires, we can become shareholders, and the same entity can continue operations in the same manner that it was doing earlier. There is no requirement for any other legal documentation to be done. It is just that the company continues to exist. So there is something called the going concern. So what it means is the business will go on forever. Yeah, the owners might change of the company, but the company will carry on forever. That is the basic logic behind the perpetual succession. Now, when you form a company, there are much more legal compliances to be made. Similarly, there is annual compliances also to be made, which I will detail in the coming slides. I hope by now you would understood what a private limited company is. There is a mandatory audit required for private limited companies. So what it means is even if there are no transactions, the company has not done a single transaction in a year, even then you are required to get it certified by a chartered accountant and do your annual filing. So what it means is there is an annual compliance cost involved for including audit fees that will have to be paid to a chartered accountant. Tax for private companies, it is now you pay around 26%. So there is two options, either 25% or 26%. And this is the one of the most commonly used methodologies. So now I explained about sole proprietorship. So in Companies Act, now they've brought in something like, so there was the problem that, for every private company, you needed at least two people. But there was a requirement from the general public saying that, having two people is difficult. I am the only founder. So what will I do? I need to create something with limited liability, but I cannot do that as a sole proprietorship. And that is when the government came up with this option called one-person companies or OPC. So basically, one shareholder and this person who's the shareholder can also become the director, and they can continue start a one-person company and do business under the same. The documentation requirements are the same as that of a private company. Only difference is it can be done by a single person. It can be formed by a single person. The tax rates are also similar to that of companies. And whether it is a unique name, it is the charter documents of MOA and AOA, the perpetual succession, the formation, the mandatory audit, all of that is similar to that of private limited company for an OPC. Okay. Now, what are the steps involved in creating a company? First step is to take digital signature. So basically, when you incorporate a company, the first step is to take a digital signature. Now, the process of taking a digital signature is to make sure that all these forms are filed online. And when you're filing online, you need to sign it using a digital signature certificate. It is basically nothing but a USB token with an encryption so that the moment you stick it on, it records all the person's information as well as the time of the signature and all those things. So basically, this is the first step. The next step is to apply for that name. As I said, it should be a very unique name. It cannot be similar to an existing company's name, nor it can be similarly sounding to an existing name. As I gave you the example of Wipro and VIPRO and WIPRO. Also, another point to take into consideration while applying for the name is the new name that you've selected should not be trademarked by anybody else. The MCA website or the Ministry of Ministry of Corporate Affairs website already gives you that place to check whether there is anybody who has a trademark or anything relating to that name. So you can try it out there, and they show you all the similar names. Then you can, before applying, you can check this and then apply. At the time of applying, there is a government fee of 1,000 rupees that needs to be paid. And if you look at the overall cost of incorporation, a private limited company with two directors, the cost would be approximately 20,000 rupees if you look at the consultant charges and everything together. Now, once the name is approved, that name is logged in for 20 days by Registrar of Companies. So when that happens, nobody else will be allotted this name during this period. And that is the time when you need to submit the rest of the documents, which includes a drafted memorandum of association, articles of association, consent letters from directors. If there is a rent agreement, then you can upload that. There is a NOC, no objection letter from the building owner where you are planning to register the company. And the Aadhaar cards and the PAN cards of all promoters, including a passport size photo, would be required for uploading. Now, once this is done, the incorporation process is more or less complete. The government might sometimes ask for a resubmission based on certain clarifications that they would like. It could be something like an unclear document, or yeah, it could be the document that is not clear and all those kind of things. They might ask for a resubmission, but otherwise the incorporation would be done. Along with the incorporation itself, you will be allotted your PAN number, your income tax registration number, your ESI, employee state insurance registration number, TF number, provident fund number, TAN number, the tax TDS. If you have any TDS deductions to be done, then that TAN number will all be allotted along with this incorporation documents. Also, as a part of ease of doing business, the government has said you can choose the bank wherein you want to open the bank account at the time of incorporation. So these documents will be automatically transferred to the bank, and the bank authorities will contact you for incorporating opening the bank account. Now, one point that we have noticed is all banks start calling you the moment you've incorporated your company. So even if you have selected, say, Canara Bank or HDFC Bank, you will get calls from State Bank, you will get calls from all other banks uh, at the time of incorporation. So for opening the bank account. So this is something that has come as a practical experience, but online you can give a bank, they will definitely contact you. Now, the next point is what are the documents required for incorporation? Now, I'll just cover the private limited company incorporation document. You need to have digital signatures for all subscribers, PAN card and passport, PAN card and Aadhaar card, or one of the other IDs that is mandatory required. A passport size photo will be required. Bank statement of directors, or an ID proof with address, a utility bill based ID proof, showing your name and address. If that is not there, you can use a bank statement not older than 2 months. Similarly, if your place is on rent, a rent agreement, and NOC, so basically a no objection letter from the building owner saying that you don't have an objection to starting a business here. So these are the basic documents required for incorporating a private limited company. It is more or less similar for an LLP, only for parts the process is much more simpler. But the only point is you need to have a stamp paper of 5,000 rupees for a partnership firm in Kerala. So basically, the documents required for registering a partnership are passport size photos of partners, signature copies, and PAN card and Aadhaar card, or any other ID proof. Now, one thing that I wanted to just touch upon before I move on is about producer companies, because being CPCRI's event, I think it is important that there is an option for farmers and producers to form their own producer companies. So I'll just take you through them. Uh, a hybrid, yeah, a hybrid company. So what is a producer company? A producer company is similar to a cooperative society in many manners, but it has certain advantages of a private limited company also. So that is what a producer company is. Basically, it is a cooperative society. Uh, it is what do you say, a hybrid or a mix of private company and a cooperative society. Who can be members of this, producer company? It has to be producers or producer organizations like a cooperative society. So they can come together and form a producer company. And one important feature of this is that the profit share is based on the contribution by each members. So you can define what the contributions are. For example, if all of you are producers, you can decide, or based on the patronage, you can define, share the profit and the losses. So that is one feature of a producer company. Now, what are the key objectives of a producer company? The main objective is to help the farmers increase their income and bring them into a collective platform so that they have greater bargaining power. Also, when you all come together, what happens? There is economies of scale and there is greater market access. When I say economies of scale, it is very simple. I hope you understand. For example, when I buy something in bulk, I get a discount. I buy two items of say when I buy two packets of fertilizer, I get say if it's 100 rupees. When I buy 100 packets, I might get it for 80 rupees. So that is what we call economies of scale. When you buy more, you get at a lower rate. Similarly, you have more work to do, so you can have more employees. You can negotiate better with them, with the laborers, and so on. Similarly, if you're using a tractor, you might be able to modernize your method of farming through using more mechanisms when you have greater scale. So these will all help you get more income. This helps in creating a brand building and also value addition for farmers rather than just selling the produce in the market. It will help you process the raw materials and the produce and also create value added products. And the idea is to create sustainable agriculture and provide rural development. Now, what are the benefits for members? You are your owners. The profit can be shared based on the work that you have done or the contribution that you have given. It will give you economies of scale, access to greater technology and training, and also a collective voice and representation. You can stand together to fight for your rights. So these are basically the points that I wanted to cover with regards to the formation of the types of entities that are available and the processes that are required for formation of these entities. Now I will move on to the legal compliances required for companies. Okay. So please give me a moment. I'll just open the other slide. I hope this is visible.
Yes, it is visible, sir. But
Great,
in
great.
the other mode, that not in the screen, that slide mode.
Oh, okay. Let me change that then. Just give me 1 minute. I'll just stop share and then reshare it. Just give me a moment. I hope it is right now. You're able to see the full screen.
Yes, sir. It is visible now.
Okay, thank you, thank you. I'll just continue. So now, what are the documentation and annual compliance requirements for private limited companies? So this is another topic that was given to me. So as I said, the moment you form a company, there are certain rules and regulations that you're required to follow. And being when you have limited liability.
ഹലോ ഹലോ
So the
സർ സർ
moment,
സർ ഒരു കുറച്ച് കട്ടായി കുറച്ച് നേരം.
okay, is it
Now
better
it's
now or it's okay now?
now it's okay.
Okay, okay, sure, thank you. Uh, so the moment you form a company, you have to maintain certain records. Now, the first one is details of all bank transactions. So the moment you form a company, you open your bank account, any transactions that happen in the bank, you need to keep the details relating to those transactions of whether it is payment voucher. You need to maintain payment vouchers for the bank. It has to match with your bank transactions. Similarly, better to maintain a check register if there are checks or NEFT transfer documentation. All these need to be maintained. Similarly, for cash, the moment you pay cash, you have to create a voucher. The moment you receive cash, you have to create a receipt voucher. These are all mandatory. And any supporting documents along with those vouchers, that also needs to be maintained by the company. What are the moment you start doing business, you will have to give invoices to your customers. Details of all those invoices raised by the company needs to be mandatorily kept by the company. Whether it is for the GST authorities or the income tax authorities, these are mandatory requirements. Similarly, when you do a purchase or when you incur an expenditure, there will be bills and vouchers that you get from your vendors. So I am buying product A from a company called Company C. Company C will give its invoice to me. This has to be maintained by me and kept in a file so that it can be verified at a later stage. So this is mandatory requirement. Similarly, one mandatory requirement that has come recently since last year is a mandatory requirement for a software with audit trail. So when you say audit trail, what it means is the government has now identified that there are companies that do accounts much later, and then they say they've done it in the past. Similarly, people alter books of accounts. So to prevent all that, they have said all companies should mandatorily use audit softwares that have audit trail. And when you say audit trail, what it means is they have an edit and deletion log. So I enter a transaction for 100 rupees once. Now I need to, I realize that I've made a mistake, I correct it and I make it 80 rupees. So an audit trail in the software will show that initially this value was entered at 100 rupees. Later on, it was changed to 80 rupees. So this data along with who made that change. So if there are multiple users, then who made that change, at what time or day that change or entry was made. All these had to be mandatorily recorded in the software. Now Tally has also come up with a software with audit trail for companies. So if you have Tally, you have Zoho, you have all those kind of softwares. Most of the major softwares already have incorporated this feature into their accounting software. So it is something that you should make sure that your software also has if you are running a private limited company. All these documents kept will be required for your annual filing and audit. So this is with regards to the books of accounts. What are the other documents that you need to maintain? You need to have board meetings. So minutes of all board meetings have to be recorded and written and kept. Similarly, minutes of all general body meetings will have to be recorded and kept. Details of AGM. When you do the annual general body meeting, details of those have to be kept. Any resolution or decision taken at these meetings, it needs to be written and signed by those officers present or whoever was the decision makers there, along with any dissent note if there is any, needs to be recorded. Also, it is important for companies to enter into agreements. So the moment companies enter into agreements, you need to maintain copies of them along with all your documentation. Some of the common agreements are rent agreements, employee-employer agreements, employment agreements. There could be sale purchase service agreements. There could be agreements with investors and shareholders. There could also be agreements like non-disclosure agreements, NDAs. So what it means is, you might get you're entering into a co-development agreement. So you will say the information, there could be confidential information that comes in which should not be shared with anybody else. These are all important agreements, examples of important agreements that companies need to maintain. Another, then moving on to the next point is meetings. So as I said, along with the documentation, there are three major types of meetings that generally happen in a company. First and foremost, board meetings. When you say board, a board of the company is the directors. The directors make up the board of the company. So for any private company which is other than a small company, there should be at least four board meetings in a year, one every quarter. So a one meeting every 3 months, and that too, the gap between two meetings cannot be more than 120 days. So this is one new feature that has to be looked on by the private limited companies other than small companies. So for small companies, there are some more relaxations that are they've given. And I'm pretty sure that at an early stage, most of the companies will fall under the small company category because the capital criteria is 4 crores and turnover criteria is 40 crores. So with that amendment coming in last year, most of the company startups and small companies have come under the small company definition. And then once the board meetings are done, there is another meeting called the annual general meeting. So an annual general meeting is done when once a year, when you call all the shareholders of the company for a meeting, and two major decisions happen there. This is mandatory. One is adoption of the financial statements, and two is appointment of auditors. So these are mandatory happenings at a general body meeting. So now, if an auditor is appointed for 5 years, then there will not be an annual appointment, but it will be done once in 5 years. But financial statements, for sure, it will be done every AGM. So it is mandatory requirement. So you have to give a notice as per your articles of association. Some articles will say 21 days notice, some will say 15, some might say 3. Whatever is your articles of association saying about the notice, you have to give that notice. You have to share your financial statements with them, with all the shareholders. Generally, all queries of the shareholders are answered at the stage here. Now, there is also another meeting called the Extraordinary General Body Meeting, which is called EGM. So, AGM happens once a year. Any other shareholder meeting happening during the year, it is called an Extraordinary General Body Meeting. And this generally happens only when there is a certain specific requirement. Like maybe there is a change in the Articles of Association or a Memorandum of Association. There is a share issue being planned. All these are the cases where there is an EGM that will happen. So this is basically again a meeting of the shareholders, but a meeting other than annual general meeting. So there is no financial statement adoption or balance sheet adoption happening there. It will be usually done for a specific reason and it will be done like that. As I said at the time of explaining the features of the company, there is a mandatory audit provision. What it means is, even if there is no transactions in a year, you have to get a chartered accountant to certify your nil books of account and pay the audit fee. And it is a mandatory requirement. And an auditor has to be, as of now, a chartered accountant under the CA who's qualified as a chartered accountant and is in practice complying with the rules of the CA Institute or the Chartered Accountants Institute. If you don't get your books of accounts audited, there is penalty and late fee that will be levied as per the Companies Act. The company's financial statements need to be signed by all directors and the auditor before filing with the ROC. Now, what are the annual filing requirements for a company? There are two types of annual filings that are required for a company. The first one is with the Ministry of Corporate Affairs. Excuse me. And the second one is as per the Income Tax Act. So these are the two filings that need to be rules that are mandatorily required to be filed by the companies annually. Let's look at MCA filings, which is the Ministry of Corporate Affairs filings. AOC 4 is an annual financial, your balance sheet and profit and loss account, once the auditor and all the directors have signed, needs to be updated or filed with the registrar of companies within 30 days of the AGM. Similarly, your annual return showing all your shareholder list and all these details needs to be filed within 60 days of the annual general body meeting. What happens if you don't file? There is late fee of 100 rupees per day. Now, I come across many companies who fail to do this and then come back after a year and say they missed one filing. What happens? For one form, 365 days into 100, 36,500 rupees will be the fine. Similarly, there are two forms, AOC 4 and NGT 7. So when you delay by 1 year, you're paying close to an interest penalty of around 80,000 rupees. But if you file it on time, the filing fee is minuscule. It is as low as 300 rupees for a company with an authorized capital of 10 lakhs. So the penalties are so huge compared to the actual fee. Please make sure you file the forms within time. MSME forms, there is a form, whenever there is a payable outstanding to an MSME, you need to inform the ROC every 6 months. Similarly, all the directors of the company have to file KYC form before the September 30th. And any of these delay in any of these forms can attract penalty and interest, which is can go up to 100 rupees per day or up to even 13 times the actual normal fee under certain circumstances. Now, the next form is income tax form. And now income tax, companies are normally taxed at two rates depending on the option that you choose. If you choose the new option, it is 25.17%, and if they choose the other, it is 22%, 26%. And income tax filing needs to be done even there is a profit or loss. You might not have any profit. You might be a big loss. You might have zero income tax to be paid. But even then, you need to mandatorily file your income tax returns. In fact, if you ask me, it is more important if you file your income tax within due date if you are at a loss than when you have profits. The reason is the moment you have loss, you can carry forward that loss to adjust against your future profits only if you file your tax returns within time. If there is a delay in your tax filings, you will not be allowed to carry forward that loss. So it is very important you file your tax returns on time. What is the due date for filing? It is October 31st every year unless extended by the government. Also, this also carries a non-filing interest and late fee. And if, as I said, if you don't file it in time, there is no carry forward loss that happens. One important thing to take care when you look at income tax is every year there are various changes that happen. Because when the budget comes, new amendments come every year, and based on that, you have to comply with the rules of income tax. MCA notifications come once in a while, but income tax generally all the changes happen once a year during the budget when it is presented for next year. Now, what are the other Ministry of Corporate Affairs filing? We saw the annual filing of AOC 4, MGT 7, MSME 1, and the DPD 3. But there are other information also that needs to be shared with the registrar of companies. So whenever there is a new share issue being done, there is a new director being added, an auditor is being appointed, there is a loan being taken by the company. When that loan is repaid completely, when there is a share capital increase, when there is a change in the address, when there are changes in directors, there is any case of special resolution being filed, like a new share issue or any other for reason, increasing in the capital, all those scenarios, it is mandatory to inform the registrar of companies by filing the requisite forms. One point to note is a private limited company can take loans only from its directors, its shareholders, or close relatives of directors. They can also take loan from banks and financial institutions, but they cannot take loan from other individuals or other people who are third party, not related to the directors or are not shareholders to the company. Now, the next point is what are the other registrations that you have to do once you have formed a private limited company? Okay. One important registration is the Startup India scheme. So, what happens when there is a Startup India scheme? There are many benefits that the government has said for startups, right from getting government grants, reduction in government fees. Now, one example of reduction in government fee is the trademark fee. If you want to apply for a trademark, if you have a Startup India scheme, there is a 50% waiver of government fee. Similarly, once you have a Startup India registration, you can apply for the interministerial board approval. And if you get an interministerial board approval, you don't have to pay income tax during for the next 3 years. And this option can be taken anytime during the first 10 years of being a company. There is a catch though that only as on date 1,168 startup companies have received the interministerial board approval out of close to 1 lakh companies that have registered. So you're looking at a percentage of maybe around 1% that gets the interministerial board approval. But there is nothing that prevents you from applying for it. Our experience has been that if you have a very unique product which is not there anywhere else, do apply for it. There is a good chance that you will get it. But if you don't have that uniqueness, it is something that is already there. You're trying to do it only in a slightly better way or something. The chances are you will not get the INB interministerial board approval. Now, what are the other benefits? Once you have a startup, you can self-certify a lot of other documents, and that also helps in reducing your legal compliance burdens. If you are into import or export of goods, it is mandatory to apply for an import-export code. Only if you have an import-export code, you can import or export. It is an online application form. It is managed by the DGFT, the Director General of Foreign Trade. And once you apply, you get the IE code, which is the same number as your PAN. Your PAN gets registered there and you get an IEC. Now, what is the process? It is an online form. There is a small government fee that needs to be paid. Excuse me. At the time of IEC, and you get it the next day. You apply for it today, you will either get it today itself or by the next day it is processed and you receive it. So, another mandatory registration that comes in is GST, goods and service tax. The moment if you are into goods, the moment your turnover reaches 40 lakhs, it is mandatory for you to apply for a GST registration, unless it is an exempted good. Also, if you are into services, the limit is 20 lakhs. So the moment you have more than 20 lakhs in services, other than exempted services, you are mandatorily required to apply for a GST registration. There is also, once you apply, once you get the registration, you will have to do the monthly or the quarterly filing as well as the annual filing if required. The next is MSME registration. So once you are an entity registered under MSME, it has very similar benefits like startup scheme, wherein there is government fee reduction, waivers for participation in government tenders like such as EMD deposit reduction, and also there is a government policy wherein they have said they will procure up a minimum of 20% of all items from MSMEs. So there is a greater chance for you to win tenders if you have an MSME registration. The process again is very simple. You can take an Udyam registration online. It is a self-certification application documentation. Another important area that you should look at is FEMA compliance. Moment foreign exchange is involved, FEMA compliance comes in. FEMA compliance comes in. Foreign Exchange Management Act is what is FEMA standing for. If you are investing, taking money from foreign investors, if you are taking money from foreign, donors or resident, non-resident Indians, you have to file. You have to file the forms with the RBI. So most of the cases, it is now automatic approval. There are certain sectors and certain countries that are barred from investing in India. And then there are certain countries wherein you need prior government approval before the investment comes in. But other than that, it is mostly automatically approved. Being CPCRI, I must say that you should keep in mind that non-residents under FEMA have a restriction in holding agricultural land. So that is something that you should all be aware of. Uh, when you file the FEMA compliance, there are rules to be followed. Like if you're issuing shares to a foreign shareholder, you have to mandatorily inform the RBI within 180 days. There should be a registered valuation taking place for that share issue. And also, if there is external currency borrowings, ECBs, then those rules have to be applied over and above the registrar of companies or MCA filings. Another point to note is TDS. I know I might be exceeding time. We started late, so I have couple more slides after which I'll take the questions. Uh, TDS. So TDS, as I said, there is Income Tax Act says they have listed down a few transactions which would mandatorily require you to file your TDS returns. You have to deduct that payment at the time of making the payment or at the time of entering into that transaction. You have to mandatorily uh, deduct certain amount and make the payment. Two new amendments that have come in for the time being, I can ignore them because these are for companies that have more than 10 crore turnover, and I'm sure most of you will be below that. The moment if you have any questions, you can ask me that at the end. I'm skipping those parts. And moving forward, this is the TDS chart. These are the kind of common transactions where you will have to deduct TDS, and I have mentioned the rates as well as the basic exemption limits. I'll share these slides with you so that you can have a go through it. Some of the examples are payment of salary. When you have salary payments to be made, if they come under the tax slab, you have to deduct TDS. Similarly, if you are paying interest, if there is any contract, rent, commission or brokerage that you are paying, immovable property, there's a sale of immovable property, there is any professional or technical service, all these require you to deduct TDS rates of 10% or 2% or 1% or 5%. And if you're crossing the threshold, for example, if you are paying dividend of more than 5,000 rupees, you have to pay TDS. Similarly, if you are paying professional fee more than 30,000, then you have to pay TDS. Similarly, if you are paying rent of more than 2,40,000, you have to pay TDS. If you are paying commission or brokerage above 15,000, you have to pay TDS. So these are all rules are there. Similarly, if it's contract, it is a single payment above 30,000 or a consolidated pay of more than 1 lakh per year to a contractor, you have to deduct TDS. So these are rules that have to be mandatorily followed. So this is what I wanted to cover in 1 hour. I'm open to questions. I would love to take your questions, and
Yeah. Thank
I
you.
can
Thank
answer
you, sir.
those.
Thank you. Thank you. So participants can ask questions or they can
Just
even,
give me 1 minute. I'll just drink some water. Just
yeah,
give me 1 second,
yeah,
and I'll take those questions.
yeah, sure. Any questions, sir? You can unshare now that our screen you can, presentation. You can, anybody would like to ask questions? Since
Yeah, any question if it is there, feel free to ask. It need not be specifically with the topic
yeah,
here, but if there is anything that you feel you need to ask the chartered accountant, feel free to ask.
yes. I think no questions. I think you
Sure,
can
sure.
chat in the chat box also. You can type if required.
Right. Feel free to type in. Also, you can note down my number. I will just share my number also on the chat. So if there is anything you feel you should reach out to me on, feel free to do it.
And the doubts will
I
come, yeah, doubts will come only when we start really registering.
right, right. So feel free to reach out to me in case there is any registration help required or anything of that sort. Feel free. I've shared my number here, so you can reach out to me on WhatsApp on this number. I will be happy to help you with in whatever way I can.
Okay, then, sir, we will wind up the session. Thank you for a very, what you can say, very elaborate lecture on this for company registration, because that is very important, complying the, what you can say, the for all the government norms. And whenever there is some deviation, there will be a lot of legal battle also. And even
Yes,
people may interpret it as a corruption also. It may be ignorance, but
right, right. So
yeah.
what has happened is over the years, see, our old Companies Act was 1956. So the advantage there was all the fines and penalties. The maximum fine was 500 rupees. But the moment 2013 Companies Act came in, the fine, the numbers of, it's like 100 rupees, 200 rupees per day. So the numbers are huge and the penalties are also in lakhs and crores. So, if, for example, if there is a violation of deposit rules, there is a penalty involved of 1 crore. So you might have done a mistake of maybe 1 lakh, but you end up paying a penalty of 1 crore means what? So that is how the rules have been drafted, and it is very important that it is complied with properly, or else it becomes a big pain when you carry on the business.
We can read also many times different companies suffer such things, fines. they get
Right,
they get
right.
interest. Okay, sir. Then we will wind up the session today. Okay,
Sure.
thank you for very nice lecture.
Thank you very much. Thank you. Thank you. Thank you once again, CPCRI, for the opportunity. I absolutely enjoy being there. Physically also, I've been there a few times. It's a wonderful place. It's a wonderful
An
campus.
announcement, please. In
Okay,
terms
sir.
of the
Absolutely
marking of
wonderful place.
attendance,
Thank you so much
I
for the
hereby
opportunity.
consent in the
Okay.
ICR mail of all the staff CPCI